So now we're on to chapter 17, which is activity-based costing. And so activity-based costing is something that can be used. It can be used with job costing, or it can be used with process costing. What activity-based costing, or ABC, is when we have our direct materials, we have our direct labor, and we have our overhead. And in the past problems, we need to figure out, hey, how do we take this overhead and allocate it to each one of the products? And the idea is what we've done before is we've taken all of our overhead cost from all the different sources, all the different categories, and put it in one bucket. Then what we've done is we've decided to use one driver to allocate that to the products. And so a lot of time we'll use direct labor hours and allocate that entire bucket to the products. So I think it was, I can't remember, it must have been problem or chapter 15 when we were doing job costing. We would have our overhead cost, and then we would say, hey, well, we're going to allocate overhead at, $1 of overhead for every $1.15 of direct labor hours. And so what that is, that's using a plant-wide rate to lump all your overhead costs together and then allocate it based on whatever driver you decide. And so that's a fine method. However, what ABC costing does is instead of lumping all your overhead into one bucket, it looks at them as individual costs and breaks them out and says, hey, now maybe it doesn't make sense to use one driver, such as direct labor hours, to allocate all these different different costs. Maybe we look at them and we use different drivers for each one of our costs. For example, in the problem 17-1 that we're going to do, it talks about our overhead, and it breaks it out into 3 different categories. So inside that bucket, we have engineering support costs, we have electricity costs, and setup cost. And so maybe with something like setup cost, for example, like what if we chose to do a plant-wide rate and we chose to use direct labor hours? So, but what if we assumed that one of our product had one setup or one batch and another one had 10 batches? Well, it cost $52,000. And so we'll say setup costs are our most expensive thing. That would mean we were kind of equally distributing those setup costs based on direct labor hours. Well, it's not. Direct labor hours doesn't make your setup costs go up. It's the different batches that you do that makes it go up. So if you had 2 products that have the exact same amount of direct labor hours, but different number of batches, you would be allocating your setup cost equally, when in fact the one that requires 10 batches is actually creating a lot more cost. So with ABC costing, we're just getting more specific and allocating our costs better to help us make better decisions. So let's just go ahead and jump in and just kind of see how this works. So what we're going to do with this problem is we have product A, product B, and it tells us what our direct material cost is per unit, direct labor hours required, machine hours required, batches required, the number of units we produce, and so on and so forth. And so what we're first going to do is we're going to go ahead and do a plant-wide rate and see what that looks like. And then we're going to go ahead and do ABC costing to see how that looks different. So to do the plant-wide rate, let's start off and let's figure out what our manufacturing overhead is. And so that's just listed out right here. let's 24,500. There we go. So we have $111,000 of total manufacturing. That's not spelled right. Manufacturing overhead. There we go. And so what we're going to do is we're going to allocate those costs based on direct labor hours. So we need to figure out how many direct labor hours we have. And so it doesn't give us that number, so we need to calculate it. And so, okay, product A, product B, it says we do 10,000 units of product A, 2,000 units of product B, and then it tells us that we have 0.3 direct labor hours per unit for product A, so 0.3, and then it says we need 1.6 of B. So the total direct labor hours required for all of product A is 3,000, and total direct labor hours for product B is 3,200. So we have total direct labor hours of 6,200. So if we take our 111,000 divided by our total direct labor hours, that would mean our plant-wide overhead rate is $17.90 that we're going to apply to the products per direct labor hour. And so to figure out our set, it asks us to compute the gross profit per unit. And so we're going to add in our direct material cost per unit, which is 15 and 24. And then direct labor hours required was 0.3 and 1.6. And then it tells us that our direct labor rate, which says we pay $20 an hour. So that means we're going to add direct labor per unit of $6 for product A and $32 for product B. And so now we want to plug in our plant-wide overhead rate, which we calculated right here. And then plug in our direct labor hours per unit. Gives us how much overhead that we're going to allocate on a per unit basis for product A and product B. So that means we have a total manufacturing cost for product A and product B. So that's just going to be the sum of direct materials, direct labor, and factory overhead. So now to compute gross profit, plug in our selling price per unit. So we have 30 for product A, 120 for product B. That's just given to us up here. And then take our manufacturing cost per unit and subtract that out, because our gross profit per unit is $3.63 for product A and $35.35 for product B. Alright, so now it wants us to do excuse me, the same thing, except we want to figure out the gross profit per customer. And so if we take the gross product per unit for each one of these and figure out how many units And so it told us that we did 10,000 units, of product A, 2,000 of product B, and then plug in how many customers. So we had 500 of product A and 400 of product B. That's listed up here. Gives us our units per customer. So then if we multiply that times our gross margin per unit, we get a profit per customer for product A and customer for product B. And so then we want to factor in the customer service costs. And so customer service costs are not part of our cost of goods sold. That's part of selling cost. And so that's going to be outside of our gross margin. And so it tells us that customer service costs are $81,000. And our total customers is going to be the sum of both products, so 900. And so the customer service cost per customer is $90 per customer. And so if we glance up here at our gross margin per customer, okay, if we look at product B, it's like, oh, okay, well, they got a gross margin of 176 plus customer service costs of 90, so they're making a profit. So there's no problem with product B. But if we looked at product A, they're only making $72 before customer service costs. So what it looks like here is that product A is actually losing money. Now, if we're a manager, we might look at this and be like, hey, well, product A is not profitable. Maybe we discontinue using this, or discontinue making it and selling it. However, we want to, the way we're looking at this through a plant-wide rate, which might not be the most accurate thing. And so these might actually not be the most accurate numbers. So what we're going to do is we're going to use ABC costing to run through this to figure out, hey, is this really the case? Is product A really not a profitable product? And so this is really important information if you're a manager. Let me erase that out. Let me take that out so we can actually work through this. And so instead of having all our overhead lumped together, we want to break that out between what we've identified. Is we actually have 3 different categories: our engineering, electricity, and setup cost. So with our engineering support, so it tells us up here that, so for engineering support, so engineering modifications, so we do 12 engineering modifications for product A and 58 for product B. And I think it tells us the cost here. Let's see. All right, so we actually kind of have to back into this number. So it tells us that we have engineering support costs of $24,500. So let's do $24,500. And for our modifications, we do 12 for product A, 58 for product B. So we do 70 modifications total, and the total cost is here. So if we take our 24,000 divided by our 70, gets us to be 300. It costs us $350 per engineering modification. So to allocate that to product A, it says it has 12 modifications at $350, and B does 58 modifications at $350. So product B has a lot more modifications, a lot higher. It's creating a lot more overhead for us. So for electricity, so that tells us up here for our let's see. So what drives the electricity is, it says that it's machine hours that drives electricity. Now before, in our plant-wide rate, we were essentially allocating our electricity costs based on direct labor. Well, it's not direct labor that makes the electricity costs go up. You know, people put in more hours, it's not making your electricity bill higher. What's making your electricity bill go higher is the fact that you're running your machines more and you're running them for more hours. So it tells us for our machine hours, product 1 has 0.1. Is that megawatts? Anyway, 0.1 units, and product B has 1.2 units per. Should be MH. There we go. All right, so it for the electricity cost, we have 0.1 megawatts or whatever it is per machine hour, or machine hours per per unit. So if we take our 0.1 and multiply that times the total number of units, 0.1 times 10,000 is going to be 1,000. Then if we take 1.2 here times 2,000, that's going to be 2,400. So 1,000 and 2,400 is going to be, add those together, that's going to be 3,400. So we have 3,400 machine hours and electricity costs of 34,000. So 34,000 divided by our 1,000 plus our 2,400. Let's break that out further. It's going to be our 0.1 times our 10,000. And this is going to be 1.2 times our, is it 2,000? Yeah, 2,000. So we're going to use our 10 megawatts per machine hour, and so we calculated 1,000 for product A, 124 for product B. So okay, so those two together, 34,000. That accounts for all of our electricity cost. So now for setups, is our batches. So 52, is it 52,000? 52,500. So divide that by the total number of batches. So for batches, we have 125 and 225. So total of 350 batches. So that means the cost is 150 a batch. So 125 batches for product A and 225 batches for product B. Gets us our total setup cost, 52,500. So we've accounted for all of the setup cost. So now we can add up our total product cost for A. And add up our total product cost for B. Divide by our number of units, so we had 10,000 and 2,000. That's going to give us our overhead per unit. Now we add in our direct material cost per unit, so that didn't change. That was $15. And $24. Oops, it's 15 and 24. And our direct labor doesn't change. That before it was 6. And we had 32 before, so we just get that from, let's see, up here. So 6, 32, 15, 24. So now we do our selling price. So we had 30 for A, 120 for B. Our total manufacturing cost using the ABC method. Gives us our new gross profit. And when you guys do this in Connect, one thing to that might take into consideration is when we do these functions and these formulas in Excel, it rounds or it keeps all your decimals. It doesn't round it. However, when you start doing this in Connect, it's probably going to want you round it to like the nearest penny. And so you could have some rounding issues like once you get into Connect. So if you're doing Connect, go ahead and like, you know, punch them on the calculator or put in a round function, and then it'll take care of any rounding or penny issues. So So now what we have here is a gross profit per unit of $571 for product A and $24.98 for B. So to do the gross profit generated per customer, we just carry our gross profit down. And then units per customer, we already calculated at 24A, 54B. Gets us our gross profit per customer. And then if we subtract out our customer service cost, actually, I'm just going to back up and I'm going to put in a round function just so when you guys work in Connect, we don't have any rounding issues. So to do that, you just type the word round in front of your formula, put in what you're doing, and we want to round it to the penny, which is 2 decimal places. There we go. Oops. There we go. Okay, so by choosing ABC costing and taking a harder look at what's really driving cost, it's not direct labor hours. In fact, it's not direct labor hours for anything. So it's either modifications for engineering, or it's machine hours, or it's batches. So direct labor has nothing to do with our overhead costs, or at least very little. What's really driving it is these 3 other different drivers. And so by taking a deeper look, we identify the real costs for product A and product B, and we find out that, hey, product A is actually profitable. And I mean, they're actually both profitable, so we don't want to stop making product A. And so that kind of in a nutshell is why ABC costing and cost and managerial is so important, is because you're really putting together information that you're going to make real world decisions off of. And so you want to make sure you have good numbers and good understanding of how this stuff works in order for you to make good decisions as a business. If you were to just go with a plant-wide rate, you might discontinue product A and really hurt your business. And so understanding how these costs work and how the cost and flow to your product is such an important part of any business. So anyway, ABC costing, really important, and a really good tool, no matter if you guys are going into accounting, going into management, going into whatever you decide to go. So it's a really, really important concept, and really worthwhile for whatever route you guys decide to take.